Welcome back to KTM Investing. Today we're going to take a look at NIO and why its CEO William Li Bin is about to exercise his option to purchase 13.5 million shares. So let's look at why this might be the case. The big firms on Wall Street make a tremendous amount of money by shorting various stocks, and NIO has been a prime target of this financial Hunger Games that has made firms like Morgan Stanley a lot of money for themselves and their clients. The thing you need to pay attention to as an investor is not to do what they say, but do as they do. If you start paying attention to the trends, they will have articles written and downgrade the stock and also give it a sell rating to drive the share price down. This is intended to scare Main Street investors into selling their shares. You have to remember that there are only so many shares of the company available. So for an entity to gain shares, an entity must sell their shares. With NIO having 2.24 billion shares outstanding or available for purchase, if an entity like JP Morgan wants to buy a large amount of shares, and there are no sellers, it is more difficult to obtain large amounts unless NIO does a new offering of shares. As a result, they scare investors into selling by driving the price down, and then they buy those shares that investors just sold. After they buy all the shares they wanted or as much as they can get their hands on, then you start seeing positive articles about the stock, and new predictions of the stock going to $8. This creates a demand for the stock, and the stock price starts to rise. When it gets to the $8 target price they wanted to sell at, then they dump their shares, doubling their profit, as they paid $3.69 per share for the stock. Once they sell those shares and make that profit, then you will start seeing more negative news in how the stock is overbought, and you should again jump ship and dump your shares. This will drive the price back down to around $5, at which point they re-enter the market and start buying up the shares, driving the stock price to around $13 per share, where they will again sell and repeat the news cycle process over and over again. However, what they don't realize is that people are now paying attention to these trends, and it is getting a lot harder to get investors to let go of their shares, because they see what NIO is becoming, and they now have enough faith in the stock to hold on for the long term. NIO wants to change how we see electric cars, and not in the realm of science fiction. Its founder, William Li Bin, took the lessons he learned from the previous company he started in the year 2000. That was a car comparison website and online review platform called BitAuto. BitAuto became a leading automotive service provider in China, and when William Li Bin started NIO, he had the same vision of becoming a leader in EV technology. NIO has made great strides in each of the categories that set it apart from its competitors, with its main advantage being its battery swapping service. However, NIO also has the advantage of building the vast majority of its EV parts in-house, which gives them full control over their pricing and their cost to produce each vehicle. This includes everything from computer chips to software, AI, and navigation tools. This makes NIO different from most of its EV competitors that often buy parts from other businesses, and are at the mercy of potential price hikes from these suppliers that can be unpredictable and disruptive to the manufacturing process. NIO's approach gives it more control, so it can make sure their technology is seamlessly integrated into their EV platforms. This focus on tech and the customer experience has set a new standard in the EV industry, and NIO's focus on safety and convenience is second to none. Many investors are watching the EV market but are unsure of which companies will be the winners when the dust settles. It is a very competitive space, with companies from America, Europe, and Asia all competing to gain market share. NIO stands out due to its advanced systems that have 9,800 patents filed globally, with 3,682 patents that have already been granted. Not only does NIO offer more technologically advanced electric vehicles, it also offers a unique customer experience. For example, when a customer uses a battery swap station, the customer simply has to select the type of battery they want prior to arriving, and then release the steering wheel and the car does the rest. This is a very efficient process, and it lets drivers change their car battery quickly, in approximately 3 minutes. This unique service is part of NIO's appeal, which is also a long-term solution to battery degradation over time. NIO has patented this system, and it is quickly becoming the standard in China, as owners of Tesla and other EVs that now need new batteries after exhausting their charge cycles are finding out that the cost of replacing a battery is around $20,000. NIO's current stock price, as of May 29, 2025, is being watched closely by Wall Street and Main Street investors alike. Many factors affect stock prices, including company performance, consumer and investor sentiment, and market news. Global economic conditions play a role, and with the European Union indicating that they will fully let Chinese vehicles in without tariffs and instead opt for minimum price requirements, the Chinese EV market will definitely see a rise in sales. NIO puts a lot of emphasis on cutting-edge technology, which is a core part of its strategy. One of the big areas that has been understated by the mainstream media is its in-house chip that has 4 times the computing power of NVIDIA's Thor chip. This chip, called the NX 9031 or the God chip, has enabled NIO to leapfrog their competitors and are now the first fully autonomous driving EVs. Because of this chip, NIO has been able to integrate incredible safety measures for tire blowouts at high speeds, where the vehicle maintains its course without deviating from its current lane, even at speeds upwards of 100 miles per hour. NIO has also added a feature that allows the car's AI system to detect when a driver is asleep, and takes control of the car, and safely moves off the roadway to the side of the road. This feature can also detect if the driver is in distress, like having a heart attack or stroke, and perform the same safety maneuvers to pull the car over, but also call emergency services for the driver, and open the vehicle doors for emergency personnel to access the car. The chip also enhances the capabilities of the in-car assistant called NOMI, allows for seamless high-speed control of all the car's functions and entertainment features. By making its own chips, NIO can customize them and enhance the capabilities as needed, which helps make its cars smarter and more efficient. This is a monumental step for a car company. NIO cars have advanced autonomous features using many sensors and cameras to help the car understand its surroundings. For instance, NIO's system is called NAD, or NIO Autonomous Driving, which has now been integrated with the NIO World Model Navigation System, which aims to assist drivers and improve safety. NIO plans to make these systems even better over time, making their cars unquestionably more advanced than their competitors. The company designs its cars to be very safe, both in the physical structure and in the electronic safety systems, which causes NIO cars to often obtain the highest safety ratings, and their advanced driver assistance systems, or ADAS, play a big role in this outcome. These systems can warn drivers of danger and will even take action to prevent an accident. This focus on safety plus tech is important for buyers, as it really builds trust in the brand. The company has also developed its own cockpit controllers and created its own LiDAR control chips. LiDAR sensors have been shown to be more reliable even in adverse weather conditions, which is why NIO has made it a staple in its EVs. The NIO ET9 model, for example, showcases many of these innovations. It features advanced computing platforms and sophisticated sensor suites. These are not just add-ons, they are built into the car from the start. This integrated approach is a hallmark of NIO's engineering, and it really shows their commitment to creating value for the end user and their commitment to creating an entire ecosystem around the brand. NIO is not just focused on China, it is expanding its reach around the world, and Europe is a major target market for NIO. This is because many European countries support EVs, and countries like Norway and Germany have many EV buyers, with 80% of the vehicles sold in Norway being EVs. NIO has already opened showrooms in some European cities, bringing their premium EVs to these new customers. The company carefully chooses where to go, looking for places with good EV infrastructure. This includes charging stations and government support for electric cars. NIO's sales model offers more value, and this is how it tries to beat competitors. Many Western car brands sell basic models, and customers then pay extra for more features. NIO often includes many advanced features as standard in their models, so the starting price includes things like advanced safety systems, entertainment systems, and premium sound, that may cost more when compared to traditional automakers. This makes the cars feel more luxurious, and it also makes the pricing clearer for customers. They get more for their money up front, which can be very attractive to buyers. This value-first model is also helping NIO in other regions. Think about markets like South Africa or Malaysia, where customers are often very price-conscious, but also want good quality and features. Most Western manufacturers often overlook the revenue potential of Africa, but the Chinese have embraced a symbiotic approach and realizes that there are many potential customers just waiting for an opportunity to purchase quality EVs. Nigeria, for example, has a population of 220 million and a nominal GDP of 477 billion US dollars. Their citizens are primed for EV and solar adoption, and the Chinese have made it clear that they are serious about their commitment to the region by building manufacturing plants and partnering with local companies. Because of this gesture of mutual success, NIO's products appeals to them, which makes adoption in these areas a lot easier for the company and the Chinese EV sector as a whole. By offering base models with luxury features, NIO cars are seen as a better deal, even if the initial price point may be similar to its competitors. The citizens of these countries feel a sense of partnership and prosperity when they work with the Chinese, while the US is busy playing the victim and accusing other countries of taking advantage. Currently, NIO is exploring new markets and taking advantage of the potential for growth outside of traditional EV strongholds. This global vision is important for NIO's future and will not only penetrate existing markets but foster new ones as well. The company is adapting its strategy for global markets, with an understanding that customers in different regions have different needs, and NIO and the Chinese as a whole have demonstrated a willingness to accept this fact. The Chinese have chosen to assimilate with the local population rather than try to make them in their own image. For example, battery swapping might be very popular in dense cities, while in other areas, charging might be more important, and this is why NIO has a dual strategy. You can still fast charge your EV or choose to use the battery swap option. The company tries to offer flexible solutions, including its battery as a service program. This allows customers to buy the car without the battery, then pay a monthly fee for the battery, ranging from $150 per month to $250 per month, depending on what type of battery you choose. The beauty of this system is that you can opt for a high-capacity battery for long trips, and then switch back to a lower, cheaper option once you are back in your hometown. It lowers the initial purchase price of the car and makes NIO cars accessible to more people worldwide. So now we want to dive into the European minimum price rule that is being discussed that will take the place of European tariffs against Chinese EVs. NIO has already positioned itself as a premium brand, and its cars are already priced higher than most other Chinese electric vehicles. A minimum price policy is meant to give the European manufacturers a fighting chance, but the truth of the matter is that even if a European car was next to an ET9 and the price was the exact same, the customer would still more than likely choose the ET9 because it is way more technologically advanced and provides better value. So these new rules might not hurt the Chinese EV sector or NIO as much as the European industry expects. They could even create an advantage. The situation is definitely complex. Tariffs are usually seen as negative for importers, but the idea of a minimum price changes things. It could protect European car makers from really cheap imports, and it could also push Chinese brands like NIO up market. NIO is already aiming for the premium market, so this policy might actually line up with its existing strategy. Of course, the company would still face challenges, but the impact might not be purely negative. It could lead to higher profits per car sold in Europe, and this is something investors are watching closely. NIO has a pretty unique strategy for batteries, which is the most expensive and important part of any electric vehicle. NIO is famous for its battery swapping technology, which allows drivers to replace a depleted battery with a full one. The process takes only a few minutes, making it much faster than traditional charging. NIO has built many power swap stations, especially in China, and this network is a key advantage for NIO customers. It addresses concerns about charging time and range anxiety, which is a big part of their customer service. The company is also working hard to control battery costs. Batteries are expensive, and lithium is a key material. NIO has invested in lithium mining companies, which gives them some control over the supply and can help protect against price changes for raw materials. Recently, NIO also formed a joint venture with CATL, which is the largest battery manufacturer in the world, providing 65% of the world's supply. CATL owns a 21% stake in NIO, and together they're developing longer life batteries, and this partnership could lead to better battery technology and add another source of revenue for NIO. It might also help make batteries cheaper in the future. Government support is also helping NIO. The Chinese government is investing in electric vehicle infrastructure, including funding for charging stations and support for battery swapping networks. This kind of government backing is super helpful for NIO, as it helps the company expand its services more quickly. More charging and swapping stations make owning an electric vehicle easier, and that in turn encourages more people to buy electric vehicles. This support really creates a better environment for electric vehicle growth. NIO's battery strategy is comprehensive. It covers technology, supply chain, and services. The battery as a service model is a great example. Customers can buy a NIO EV without the battery and pay a monthly subscription for the battery instead. This lowers the upfront cost of the car, and it also means customers can benefit from new battery technology as it becomes available. They can swap to newer, better batteries whenever they want. This flexible approach is pretty innovative, and it really makes NIO stand out from a lot of competitors. NIO is making some real changes to become profitable. One big change is moving away from those costly showrooms. In the past, NIO built large, fancy showrooms called NIO houses, which were largely responsible for NIO's cash burn rate. Now, NIO is focusing on more efficient sales methods like using existing car dealership models and online sales. These changes can help reduce costs significantly, and helps the company with their push to achieve profitability by the fourth quarter of 2025. Experts have different opinions on Chinese electric vehicle makers and whether or not NIO will survive the highly competitive Chinese EV market. But there are some analysts on Wall Street that are really bullish on NIO because of the technology, customer service, and long-term value that the company is slowly building. The way in which the company has been silently growing is only comparable to the rise of Amazon, that was unprofitable for years, then became one of the most profitable companies in history. U.S. automakers are also watching Chinese electric vehicle manufacturers closely, and are now recognizing them as serious competitors and even leaders in the EV sector. This just shows the growing influence of companies like NIO in China, and now around the world. So for investors, there are several factors could trigger a rally for NIO's stock. Improved vehicle margins to around 15% is definitely a key factor. Successful global expansion is another big one. Selling more cars in Europe and other markets will boost revenue and solidify NIO as an international brand. Continued technological leadership is also crucial. New features and better performance can attract more buyers. Positive news about manufacturing costs reductions or new partnerships will also help. All these developments are watched closely by the financial markets. We think that NIO has made a strong case with its technology and a unique value proposition, and it's expanding globally while adapting its business model to individual market conditions that exists in other countries. There are still challenges like tariffs and homegrown competition, but NIO has made all the right strategic changes to lead to better financial results. Please note that this is not to be considered financial advice, and you should always do your own due diligence or consult with a financial advisor before making any investment decisions. Don't forget to give us a thumbs up if you like the video. Thank you for watching, and we will see you in the next video.